Those were the headlines that we're tracking for you this evening. But on what's brewing today, ahead of the Global Investment Summit in Karnataka, the state's Chief Minister Basavaraj Bommai is confident that investors will be keen to invest in the state. Speaking exclusively to CNBC-TV18, he said that Karnataka, being one of the most technologically advanced states, is a great destination for investors seeking innovation. About the state's electric vehicle policy, he spoke about Karnataka's plans to integrate R&D with EV manufacturing in the state. Take a look.
The niche area technology is here. We have got highest number of R&D centers here. 400 world-renowned niche R&D centers are here. We are very strong in innovation and technology. So people are seeking technology, if people are seeking innovation, then highest number of startups are here. Countries, 60% of startups are here. And countries, 50% of unicorns are here. Out of 4 decacorns, 3 are in Bangalore. That speaks volume of the opportunities and the science and technology and human resources. We got the EV policy where we're going to make a hub, and what all facilities the other states are giving, all incentives are the same things available here. And I want to integrate R&D with the manufacturing, so that any development in R&D will be complementing manufacturing, and any issues in manufacturing can be addressed by R&D. So this has really caught the attention of a lot of people, and a lot of people have shown they have stopped expansion in those states and they want to do it here.
All right, now Middle East's largest alternative asset management firm, Bahrain-based Investcorp, which manages over $42 billion in assets globally, is looking to aggressively ramp up investments in India. It forayed into the alternative investment space in India with the acquisition of IDFC Alternatives in 2019. And since 2017, it has deployed nearly $500 million in India across private equity and real estate, of which around $260 million is across 13 private equity investments. Now, these PE investments include Windgreens, Bewakoof.com, Zolo, Incred, ExpressBees, among others. And the company hopes to double its current investment in India to $1 billion over a period of time. To talk about Investcorp's investment plans for India and a lot more, joining me now are 2 special guests, Mohammad Alardi, the Executive Chairman of Investcorp, and Rishi Kapoor, the co-CEO of the company. Mr. Alardi and Mr. Kapoor, thank you very much for your time and welcome on the show. Mr. Alardi, let me begin with you because, India represents about less than 2% of your total assets under management of $42 billion. What is the growth opportunity you see in India? About $500 million of investments currently. How much more are you looking to deploy?
Thank you for having us on your show. Like you said, we started in 2019, and so far in less than 4 years, we're almost doubling our AUM. We have invested in 14 companies. We own about 30 million feet of asset real estate, and we are looking to do more. Obviously, the story of India is really very compelling for us for the long term. The demographics, the environment that are transforming and changing, whether the digital transformation, the regulatory, the stability in politics, all these things are really makes India a very good market for us for the long term.
All right, India, a compelling market for the long term. Mr. Kapoor, let me come to you. What is central to your India investment strategy? When we talk about startups especially, what sectors are you most bullish on and where are you looking to invest?
Sure. Let me start off by echoing the word of thanks from our chairman earlier, Ritu. Thanks for having us on your show. In terms of our forward-looking strategy, I don't think it'll come as a surprise to any of your viewers that it is probably going to follow or mimic very closely the evolution of the aspirational digitally enabled consumer that is less than 30 years of age in India, that is going into the middle class, moving into urban centers across the country, and is looking to acquire and access goods and services of a reasonable quality at an affordable price point. And that spans pretty much everything that you can possibly think of, Ritu. It's not just about the latest electronic gadget. It's also things like food. It's things like healthcare and wellness. It's things like education and continued learning. So all of these are areas of focus for us, all following the, as I said earlier, the evolution of the digitally enabled, digitally native consumer. But behind that, of course, it creates an equally compelling opportunity in B2B sectors as well. And not surprisingly, therefore, for us, direct consumer and consumer-based businesses, healthcare-focused businesses, financial services-related businesses, and IT services businesses become the natural go-to destinations, as in terms of our investment strategy. Alongside that, the enablers that, enhance that ecosystem of digital delivery, including logistics services providers and warehouse and logistics platforms, are an equally compelling investment opportunity for us.
Yeah. Mr. Kapoor, if I could quickly ask you, any names you could share with us, any deals in the offing in the near term?
A deal is never done till it's done, Ritu, so it's hard to talk about on a speculative basis future deals. But some of the recent investments we've made, are exactly synchronous with those themes.
All right. Mr. Lawardi, let me come back to you. Given how global macros are shaping up, central banks are aggressively hiking rates to contain inflation. There is a global shift away from easy money, and this has impacted investments everywhere. We saw the tech stock sell off in the US, and the same trend was mirrored in India. In this current environment, what should investors be most wary of? And secondly, valuation multiples, are they expected to contract significantly from here on?
So, obviously, these are volatile times in the capital, in the public markets. It won't be a surprise to have maybe more correction. But the private markets and the alternatives, where the space that we invest in, has actually maybe taken advantage of this by receiving a lot of money being invested in the private equity, in the real estate, and the other alternative space. We are about, over $43 billion, as you said, across markets and across asset classes. We always say to our investors that diversification is really very important, and that's what we're concentrating on.
All right, diversification is important, but Mr. Kapoor, quickly, since we're running out of time, I understand you look at exits only after a 4 to 6 year period, but you have invested in some companies where you've got handsome returns. They've become unicorns now, a bunch of startups that you put money in. Any exits around the corner?
We will continue to opportunistically evaluate exit opportunities for sure within our existing portfolio, Ritu. There's no doubt about that. And you're right, some of the companies that we've invested in over the last couple of years have already achieved unicorn status. But the good news is they continue to grow, and they continue to grow in a very profitable and high, fast-paced fashion. So there is more opportunity ahead than not. And so, timing the exit to be optimal in terms of value realization and return of proceeds to our investors is going to be important. And I think over the course of the next, I would say, 12 to 18 months, we should anticipate at least a couple of additional exits from our portfolio, maybe even 3.
All right, so a couple of exits, maybe even 3 over the next few in the near term. Mr. Kapoor and Mr. Alardi, that's all the time we have on the show. Thank you very much for your time. It was a pleasure speaking with you.
Well, moving on, cybersecurity platform Blue Sapphire has bagged $9.2 million in a Series A round of funding from Barings PE India, Dallas Venture Capital and others. Blue Sapphire essentially offers a full-stack cybersecurity platform which helps automate cybersecurity operations. Now, the funds will help the startup continue to build and grow the SaaS platform rapidly across North America and India. Now, the full-stack in and predictive analytics platform empowers customers to prevent sophisticated cyber attacks across cloud, on-prem and hybrid work environments. Joining us now to discuss the company's fund allocation plans and growth blueprint is Kiran Vangvaveti, the founder and CEO of Blue Sapphire. Kiran, thank you so much for joining us on the show today. Now, like I said, Blue Sapphire offers a full-stack cybersecurity platform which helps automate cybersecurity operations. With most businesses now operating online, the cybersecurity is even more essential than it has ever been. So how are you helping your clients stay safe online? What's the kind of efficiency you provide to them?
That's a very good point. So a lot of businesses are online today, and pretty much everything and anything you see today is online. It brings back the importance of cybersecurity operations, especially in the detection, analysis, response, and remediation space. So we bring in operation efficiency of over 60% in pretty much all security operation platforms we have entered, and all clients we've been working with, a minimum operational efficiency of about 40% in most cases. So the faster you can actually detect a threat, the faster you can respond and remediate it is what really defines cyber resilience, or the capability of the business to sustain in the long term with the given cybersecurity threat environment.
All right. Like I said, you've also raised $9.2 million. How are you planning on using these funds? Is it mostly going to go towards expansion?
Majority of these funds, about 70% of the funds, are going to go towards expansion. We have already had good market traction, good maturity in terms of the product stability and everything else. Being a complete SaaS platform, so the majority of our funds are going to go towards marketing and sales expansions in North America. North America still represents about 90% of our sales.
All right, so North America represents about 90% of your sales, so it is going to go towards expansion. Now, your unified platform's capabilities go beyond XDR. Can you take us through the solution that you have on offer? What's in the pipeline? Take us through some of the use cases that you can give us.
Sure. So XDR has been, a next generation child of an EDR, an extension. And we started talking about this platform of beyond XDR, where, not just detection across endpoints, but also across networks, cloud, remote work points. And then we have the capability to respond to it becomes critical in terms of security operations. And we've been talking about this since 2018. Gartner recognized us as a cool vendor when we started off with this platform. Today, it's a fairly mature platform, and going beyond detection. XDR is primarily about detection and response in network space and adding EDR to it. So if you look at it that way, response becomes very big key identifier. And we have an agentless response platform which focuses on providing capabilities of response without having to install an agent on every single machine, which is the biggest pain points all enterprises have.
All right, let's talk about numbers then. What's the revenue picture like? What are the targets that you've set for yourself? Where do you see yourself ending this year? Also, what's the revenue mix like between India and North America?
So from a revenue mix, I said 90% of our sales already come from North America and about 10%. But we definitely want to grow larger. The opportunity space in India, the market is huge and growing. I believe we have about a 10 billion cybersecurity market growing at 27% CAGR. So we do intend to actually make a bigger picture on the Indian market space while growing also in North America. We do intend to get to a parity of 60-40 between North America and India.
All right, and what's your current revenue picture like, and what are the targets you've set for yourself?
Sure. So we crossed 3 million in ARR, is annual recurring revenue, and we intend to grow it by 3x.
All right. You've also partnered with firms including Ernst & Young, Hexaware, Tech Mahindra, Coforge, just to name a few, as a managed security service provider. Can you take us through these partnerships? Are you looking for more? What are the kind of clients you cater to?
So being a product company, we've always looked at trying to sell to the client. And early on, back in 2020, we realized that the market is rapidly shifting towards services. And our end customer is stop being the end client, and the service providers started to become our customers. So we started shifting our market strategy to focus more on service providers and SIs, and that bet has largely paid off. Going forward, we will see more and more traction in the service provider space where we take care of the technology stack and the human stack will potentially be provided by a service provider at the end client.
All right, let's talk a little bit about the India business. You said you want to make it eventually 40-60 between North America and India. Can you tell me how you plan to grow your India business and what are the biggest challenges you face when it comes to cybersecurity out here?
Well, the biggest challenge in the Indian market is obviously India is a very price-sensitive market. The very reason we are very successful in the services space and in the global market space is also the same problem we find when we start to try and sell in India, right? As somebody has nicely put it, reading an article, they said they ask for a Mercedes-Benz for the price of a Maruti. But this also enables us to become that much better and competitive in the global market space. So we are working largely with big distributor networks to reach out to all the end customers with our market segment. That seems to be the best approach to be in India.
All right, Kiran. Well, we're completely out of time and we wish you all the best going forward. But thank you so much for joining us on the show today.
Thank you very much.
Well, on that note, we have to take a short break. But coming up on the show, RBI is set to launch the first pilot of the digital rupee tomorrow in the wholesale segment. That is 1st of November. We'll get you details on that and what to expect in just a short while. Stay with us.
Welcome back. You're still with us on Startup Street. Now, the Reserve Bank of India has announced that it will commence the first pilot of the digital rupee in the wholesale segment tomorrow. Ritu, you've been tracking this and we finally have the CBDC pilot. Can you tell us more about this?
That's right. Starting the 1st of November, we will see the launch of the first pilot of the much-awaited digital rupee in the wholesale segment. And within a month's time, we're also going to see the first pilot for the retail segment. But the use cases are going to be limited. In the case of wholesale e-rupee, it will be for the settlement of secondary market transactions in the government security market, which is expected to reduce the transaction costs in this segment particularly. Now, that is where 9 banks are also expected to participate in the pilot project, from public sector banks to private sector banks as well. That is as far as the wholesale e-rupee is concerned. In the retail e-rupee segment, that is planned for a launch within a month, but this will be in select locations in closed user groups, which are comprised of customers and merchants. Remember, not to be confused with the cryptocurrency. Digital rupee, or the central bank digital currency, is merely going to be the digital form of the rupee as we know it. To further talk about, what the launch of the digital e-rupee means and, how this will help the economy, we have a very special guest joining us now, Mr. H.R. Khan, who is the former Deputy Governor of the Reserve Bank of India. Mr. Khan, thank you very much for joining us here. Now that RBI has finally said it will be launching the pilot for the wholesale e-rupee, what would that mean in the larger context? What should we expect, even though the use case is very limited at the moment?
I think a much awaited thing is going to happen. This is a welcome move. And in a sense, the Reserve Bank will be a trailblazer in this digital payment space. And in a digital payment space, India has been ahead of many other countries, including advanced countries. Take, for example, UPI. So here, what you are trying to, whole concept of CBDC is that you provide a sovereign-backed currency, digital currency, as an alternative to private currency, which has host of issues. So here, this first stage is for the wholesale version of e-rupee, and this is they have already tied up with some 9 banks, public sector, private sector, and foreign banks, and they will run this pilot. And I'm sure this pilot, whatever the learnings from the pilot, that will be used to tweak the concept and the design. And it's going to be useful, to my mind, in reaching settlement finality with less of cost, because the guarantees and collateral costs will be cut down. And the risks involved in private commercial bank will be reduced, because you are settling directly in a central bank money. I think this is going to be an interesting and experiment. And going forward, as has been said, that the retail part also will be launched and the user cases to be seen. But that is going to be more interesting because there are a lot of apprehensions about money in the retail segment because commercial banks may lose their power of intermediation. But I believe the Reserve Bank must be taking that into account going forward. I think that experiment also we look forward to with interest.
But Mr. Khan, on that specific concern that you raised about the retail digital rupee being launched and how would that at any level be a competition for banks when it comes to keeping deposits? And, what are the possible safeguards that could be put into place?
I believe central bank will provide some mechanism that this retail rupee is intermediated through the bank. So, and obviously Reserve Bank doesn't pay any interest. So to that extent, it will mitigate those apprehensions, to my mind. So, but let us see what is the design features when the retail e-rupee is launched. Yeah, look for that, wait for that.
All right, Mr. Khan, thank you very much for helping us understand the implications of the launch of the digital e-rupee. The launch in the wholesale segment come tomorrow and the retail segment within a month's time. On that note, it's time for us to wrap up this edition of Startup Street, but stay with us. More news and updates will continue right here on CNBC-TV18.